Hello everyone and welcome to another video lesson from Desire Pips. Today we will be taking a look at risk and money management. This will be by far the most important lesson I will ever try to teach you, because a good trader stands or breaks with good risk and money management rules. This lesson is so important that even when you know how to trade um, and know everything about trading, but you don't apply good risk and money management rules, you will still lose money. So before we start, a little risk disclaimer. This lesson is only for education and you should always take the risk into account when trading forex, stocks or anything else. So let's get started. First we will define the differences between risk management and money management, because this lesson is about both of them. You can get the feeling that they go hand in hand together and that both of them are essential to become a profitable trader. You can't just apply good money management rules and expect to be profitable if your risk reward is off. And this brings me to defining risk management. When we talk about this, the only thing that matters is that with every trade you open, you should always have a risk that is smaller than your reward. Therefore, we use ratios such as 1 to 2 or 1 to 3, meaning that the risk is half or a third, um, and that of course your reward is the double of that or the triple. So before you open any trade, you should always have a stop loss, and you should also always have one or multiple targets. If you then see that your stop target or take profit is not with these ratios, so let's say your stop loss is €50 and then your first target would also be €50 or even less, then you're risking too much than your possible reward will be. Because in Forex we see that only 10% of all traders are profitable, which is kind of insane, because when we look at each trade we see that on almost every currency the traders win more trades than they lose. So this tells us that most traders have poor risk reward, um, or that they are just locking in profits too fast, or that they are cutting losses not short enough, not fast enough. So that's also a very good tip that we can give you, is that you need to cut your losses very short, and you should always have a small amount of your winning trades still open, because markets always move higher or lower than you would expect. Um, so now let's focus on money management. This is also very important. But money management is about how you manage your money, your equity, or your trading account. So whether you have either a small or a big account, you have a few hundred or a few thousands or tens of thousands in your account, it doesn't really matter. These rules can be applied to all of us. And we often see that people who only have small accounts, like let's say a few hundred euros, they risk way too much. And when it then goes wrong, they lose more than they can afford. And then often they risk even more to make those losses back. And then of course emotions get involved, and then they lose even more, and then they risk get wiping their whole accounts out. So that's really a shame, because it's actually very simple, and the only rule that you should know for money management is a 2% rule. And this is somewhat of a golden rule when it comes to money management. And this is a rule that um, every trader can use. So whether you have a few hundred or a few thousands or a few millions, um, you can all use it, and it's very simple because with every trade you open, you cannot risk more than 2% of your equity of your account. And the focus is on the word risk. Most people get this wrong and think that they can only open a trade with 2%, which is of course wrong, and it's way too little in most cases. So the 2% should be your stop loss, the amount that you are willing to risk, willing to lose when a trade goes wrong and you lose the trade. And when you look at these numbers, then even if you lose, let's say 3 trades in a row, you are only 6% down. And then if you apply good risk reward ratios like we discussed earlier, so let's say on every trade that you opened, you had a risk reward of 1 to 2. So if you win those 3 trades in a row, then you can be up at 12%. And then of course you can really start to see this, that it's not that hard to earn 50% in 1 month, for example, when you stick to these rules. So for most traders, this seems too slow and they risk more and then they eventually lose. But trading, and especially trading Forex, is a marathon, guys, and it's not a sprint. So you won't, of course, see fast results. You might see some really fast results when you risk your whole account and then you win 1 trade, but 90% of traders lose money, and it's so easy to lose money and it's so hard to earn money. But when you stick to these rules, then you can really see results in the long term, and that's what it's all about. So on screen you now will see an annotation to the 2% rule, more in detail, and showing off an example. And if you still have any further questions, please don't hesitate to ask them. So have a nice day, and I'll see you later.